However, they are essentially criticizing Tesla for its ability to dominate both the software and vehicle markets, and they think that the Dojo supercomputing system will be essential to Tesla's potential to increase its market share in the equities and investment sectors. One name has consistently stood out: Tesla. Investors in Tesla have experienced a wild ride as the stock has recently experienced some volatility and pulled back from its 52-week highs. However, it's important to note that Tesla is currently in an uptrend and is sitting at the lower end of a promising channel. This means that the stock has not only topped last year's performance, but it has also been smashing records in 2020 and 2021. The main question at hand is whether Tesla can survive in the current market environment. The story has been a little different since Tesla's earnings announcement on July 19th. The stock faced a challenging time, down 21% as of August 16th. The decline began after the second quarter earnings report in mid-July. It appears that not all investors were thrilled despite impressive year-over-year sales growth of 47% and an 83% increase in vehicle deliveries. Growth stocks have been facing headwinds due to surging interest rates, but if these stocks can still perform well, it could create the perfect environment for Tesla to surge too. Let's now explore the thoughts of bulls and bears. While some people think Tesla's stock will rise, others are dubious. We'll examine both perspectives to provide you with an in-depth look at the bright side. There are a number of noteworthy upcoming announcements from Tesla, including the much-awaited introduction of the Cybertruck and its ongoing expansion into new markets and the energy sector. The stock has already increased due to the confidence of experts such as Ben Carlo regarding the second half of the year. However, the question remains, will Tesla overcome the obstacles it has faced recently and achieve an all-time high by December? Will it rise by 20% by the end of this month? Although Tesla's stock has been quite volatile, it has reached major highs, particularly in 2020 and 2021, which set new benchmarks for the firm. Despite this, it is important to note that Tesla is currently trading below those record highs, which is a positive indicator of a continued rise. The stock looks to be creating a channel, and right now it's at the bottom of it. In this case, the larger market background is quite important. Rising interest rates have presented challenges for growth stocks, with which Tesla is frequently connected. Surprisingly, however, some of these growth firms have continued to do well despite these challenges. These conditions, this begs the question of whether growth stocks can thrive in the current climate, and whether this could be the ideal scenario for Tesla to surge once more. One interesting feature is that, despite the fact that Tesla has been making big long-term moves, many investors choose to pay attention to the company's short-term stock price changes. One such example is Tesla's recent statement that it will be releasing more reasonably priced versions of its high-end S and X models. These versions will have a lesser range and be available for a lower price. By aiming for a wider client base, Tesla may be able to grow its market share and sales volume. Another important consideration is the competitive environment. For Tesla, particularly in China is a crucial market for electric cars, and Tesla faces fierce competition there. In this dynamic industry, where multiple local manufacturers are vying for market share, aggressive marketing tactics and high prices have become standard. The article also mentioned Tesla's heavy reliance on government funding and the fact that the business has posted net losses almost every quarter since launching its first electric vehicle in 2008. May represent the viewpoints of certain analysts regarding Tesla. Therefore, it's important to treat them skeptically and avoid accepting them as gospel. A complex web of interrelated elements such as market dynamics, investor attitude, and technology breakthroughs affect Tesla's trajectory. Despite short-term difficulties and conflicting views in the financial world, many people still have faith in Tesla's long-term potential to transform the automotive industry and make significant profits. Tesla's shares saw a big increase, growing over 5% as a result of positive research from BED analyst Ben Carlo. He revealed a number of encouraging developments that the manufacturer of electric vehicles can expect in the second part of the year. Of these, the much-awaited introduction of the Cybertruck grabbed center stage. Carlo highlights that the storyline for Tesla in the second half will be largely driven by price reductions and their effect on margins. He also identified several potential catalysts for Tesla's stock, such as the launch of the Cybertruck, wider acceptance of fully autonomous vehicles, expansion into new markets for the energy business, and the potential for an AI day. While traditional automakers from cities like Detroit and Germany have prided themselves on giving customers a wide assortment of choices ranging from vehicle types to trim levels, colors, features, and options, what makes Tesla unique is its approach to product offers. Tesla has chosen an alternative course. Tesla reduced the number of variations it offered, including standard features, in an effort to simplify its product line. Interior design options were restricted, trims combined with a muted color scheme. Interestingly, Tesla is not alone in using this strategy. Another strategy used by Chinese EV manufacturers to achieve success is to provide a smaller range of car configurations. This strategy is based on the theory that providing too many options could make assembly more difficult and possibly result in more production issues. In other words, Tesla's success with a more limited product lineup is seen as a differentiator that appeals to investors and customers alike. This, along with a number of intriguing upcoming announcements, has helped to boost optimism toward Tesla's stock recently. When a manufacturer receives 100 customer orders for the same car model, the benefit of simplicity becomes clear when thinking about vehicle assembly. Each order has a wide range of configurations and options. The assembly process grows more difficult and time-consuming. In contrast, Tesla's simplified strategy, which offers fewer build choices, has been beneficial. Many startup EV manufacturers and Tesla's Chinese competitors have also adopted this strategy. As a long-standing leader in the EV market, Tesla maintains its position of leadership even as competition heats up. However, profitability and market share may face some challenges as a result of increased competition. Tesla's consistent growth is demonstrated by its ability to meet and even surpass record-high monthly production and delivery targets. Although there is still a considerable gap between Tesla and Chinese EV companies, the latter have made significant progress in the last year by following a similar model. Analysts credit this growth to global regulations on emissions and mileage, which are pushing the adoption of EVs despite growing competition. Furthermore, the enactment of the Infrastructure Investment and Jobs Act in August 2022 has served as a catalyst for significant investments in the EV industry, with manufacturers pouring over $92.4 billion into EV and EV battery factories in the United States. Tesla and these Chinese companies are expected to maintain a strong presence in global markets. According to market research, U.S. production capacity has grown quickly during the past 6 months, and by 2026, U.S., while critics frequently compare Tesla to traditional automakers, many believe this is an inaccurate comparison because, for example, Tesla recently expanded. EV manufacturing facilities are projected to produce over 4.7 million new passenger EVs annually, accounting for 36% of all new vehicles sold by 2027. These U.S. facilities alone will be capable of producing enough batteries to supply 12.2 million new passenger EVs every year, representing 95% of new vehicles sold. Its installations of V4 supercharging dispensers to other nations, including as Norway and the United Kingdom, these V4 charging stations are another step in Tesla's commitment to advancing EV infrastructure. Several V4 stations have been built in Europe, and more are planned. What are your thoughts on Tesla's trajectory and valuation? Please share them below. Also, don't forget to like the video and subscribe to our channel for more updates like this one.